Okay, I'm going to now start with mutual funds. I'll set the context of the chapter, what we are going to learn in this. Before we start anything, let's first understand what is mutual fund. Now, a mutual fund is basically an instrument. It's an instrument which is created with a specified objective. I'll explain as we proceed. First, tell me what is mutual fund? Any idea about it? You would have learnt about this term, come across this term, few places. What do you mean by mutual fund? Whatever you can tell, please tell me. I want participation. Okay, understood. Collective investment fund with fund manager. Understood. Okay, more or less point which I wanted. What else? Okay, which tracks index or stocks. What else? Okay, access to multiple markets. What else do you mean by mutual fund? I want participation. You guys keep telling me points, then I discuss it. Sorry, what does units mean? In what context? Okay, measured in units. Okay, measured in units. See, if you want to explain to a layman, how will you explain what is mutual fund? And somewhere I got the answer which you said, which is more or less what I wanted to explain. A mutual fund, see, assuming I fall sick, what I would be doing is I may try some treatment on my own. But in case it's not working out, I need to go to a doctor. I need to go to a doctor when there is a illness. You cannot randomly do things with your health. Similarly, for wealth management, there are specialized people who are there. There are specialized people who are there who are going to manage your wealth. Today, if I tell you to invest in TCS, you'll say yes, I'll invest in TCS. I'll ask what is the future growth? Zero idea. You're not sure what is the future growth of TCS. I ask who are the clients of TCS. You say you have no idea who are the clients of TCS. I say which geographies they are dealing in. You are not having any idea which geographies they are dealing in. Some people buy a company, and this is reality, buy a company without even not knowing what the company is doing, without even knowing what the company is doing. Only my friend had said, buy this company, you go ahead and buy this company. Many a times in the practical world, you will tell me that TCS will go up by 20%. I'll say, what is the reason? Reason is TCS will go up by 20%. You are not able to give me a reason. The only reason you are telling me is TCS will go up by 20%. I ask you why? Again, the same point. TCS will go up by 20%. I'm asking a reason. Reason is not there because we have not done research. We have not done research. We are just randomly buying something, selling something. In case you have to do proper research, and buy and sell. My portfolio is 1 lakh rupee or 10 lakh rupee. I'm thinking why to spend every day 2 hours on research. Research means it needs some efforts from my side, and I have to read newspaper, I have to read about industry, I have to know about concept of finance, I have to do financial projections. In fact, personally, my money also I don't invest on my own. I give it to a mutual fund and then leave it, because for doing this, I know the concepts of finance, I know everything, but I have to spend time. You have to spend time, maybe 1 hour, 2 hour a day, which you may be able to afford, you may not be able to afford. So that is where a mutual fund comes. What it does is, let's assume today I'm telling you, each one of us will contribute 10,000. Each one of us is going to contribute 10,000, and I'm going to call it as AFM batch mutual fund. That's the name I'm going to give, and I collect money from you, and I am the fund manager. I'm going to invest money according to an investment objective. I'll give an investment objective. Every fund will have an investment objective. An example, a gold fund. The objective of the gold fund would be that it will say in its objective, we are going to invest in gold, give the returns which are similar to the gold return, and for long term wealth appreciation. The objective will tell what we are going to do. You like the objective, you put the money in the mutual fund. You don't like the objective, don't put the money in mutual fund. After putting the money, you cannot ask the mutual fund manager saying that, why are you buying company A, buy company B, sell company A. All that you can ask question, but he is not going to follow what you are going to tell. Only thing he has to follow is there is an investment objective. Now, why do I need this guy? Like we need a doctor for health, I also need a person for my wealth management. I need a person for my wealth management. Practical world, there are multiple avenues available for wealth management. There's something called as a portfolio management service. But there, the minimum amount is 25 lakh rupees, 30 lakh rupee, 50 lakh rupee, which may not be possible for a wider range of India's population. Then where does this mutual fund come? Mutual fund can take as low as even 100 rupee, as low as 100 rupees SIP also we have seen people doing, and as high as lakhs, crores you can do, whichever amount. So what mutual fund does is it is able to take money from people because you are not having knowledge of investment. You are not having knowledge of investment. You need somebody to take care of the investment. Now, how mutual fund does it? The mutual fund will be managing, let's assume 10,000 crores, 20,000 crores. They can afford team which can have 100 chartered accountants, the team which can have 100 chartered accountants. So some of you could be working in future as part of an AMC, doing research there. Because when I'm handling 10,000 crore, I can spend 5 crore on research. I can spend 5 crore rupees on research. But when my portfolio is only 10 lakh rupees, where do I do research? What is the point of doing research? See, many of us, in case you do not have the time, see what happens many a times is if you're investing, your mind is focused only on that. At this age, some of you could be doing investment, but at this age the focus should be on learning, focus should be on your articleship exposure, focus should be on completing your CA. Because what happens is in case you get into the stock market investing, buying, you will be totally linked with that. You will be totally focusing only on that area. 9 to 3, your mind will not deviate from stock market. That is what happens with many people. But whereas you don't have the time for it, because see, at max how much you will invest, maximum could be 1 lakh rupee, 2 lakh rupee, 5 lakh rupee. That's the outer limit I see, unless your parents are giving you more money. But maximum I see is this much amount of money you can invest. Now whatever returns you generate, that money you could make it in alternate avenues. What is alternate avenue? Sharpen your skills, sharpen becoming a chartered accountant. You become a chartered accountant, you have cleared chartered accountancy, you start earning. But I need somebody to manage my wealth. I need somebody to manage my wealth. And that is where this mutual fund came into picture. A mutual fund is a tool which is going to pool money together. It is going to pool money together of so many people who are like-minded. What is like-minded is you have the same objective of mind as that of mine. Example, I'll give you a practical example. Pass this easy. Pass it. Parag Parikh Mutual Fund investment objective. The investment objective of the scheme is to seek long-term capital growth from an actively managed portfolio of equity and equity-related security. Scheme shall invest in Indian equity, foreign equity, related instrument, debt security. You're okay with this? Buy Parag Parikh Mutual Fund. You're not okay with this? Don't buy the mutual fund. Very simple. Their objective is very clear. Their objective is they will invest in Indian equity, foreign equity, related instrument, debt security. If you like it, you will buy the mutual fund. After that, they will take care of it. They are going to take care of everything. You are not going to intervene on day-to-day operation. Day-to-day operation, you are not going to tell them anything. Like this, every mutual fund has its own objective. This I gave for Parag Parikh. I can give for HDFC Small Cap Mutual Fund investment objective. If HDFC Small Cap investment objective is to generate capital appreciation for income for its investor by investing mainly in small cap companies, in the practical, there's something called as mid cap, small cap, micro cap, all that at some stage you will learn. So I'm going to invest in small cap company. You're okay with it, invest it. Not okay with it, don't invest it. Now, where is the role of mutual fund? Look at this number. Parag Parikh Flexi Cap AUM. It is managing 84,641 crores. 84,641 crore rupees is being managed by a single person, is being managed by a single person, with a team obviously. There is a team which is going to help them out, but the mutual fund is managing 84,641 crores. Now this mutual fund can afford to employ 20 chartered accountants, 20 MBAs, 20 different professionals, and do lot of research, get to know what companies, what sectors are going to work, and accordingly make investments. So the main objective of mutual fund is it is going to take money from so many people. When it takes money from so many people, it gives it the benefit of economies of scale. It is at such a scale that it can do research, it does advertisement, it can generate returns for investors. And this practically, Parag Parikh is the only mutual fund which also does an AGM. A lot of mutual fund don't do it, they do AGM as well. So they can do anything they want because of the amount they are handling, now when I am ill, I want a doctor. Similarly, when for your managing your financial wealth, you will need a mutual fund. In fact, I keep telling this in every batch. I tell, start early for MF investing. 6 years back or 7 years back, a student of mine had started. She cleared her chartered accountancy maybe some 4 years back, and as on date today, her corpus which she has created has reached 50 lakh rupees. The corpus has reached 50 lakh rupees. Major chunk got created after she cleared her chartered accountancy. But at the start itself, she was doing some 10,000 or 5,000 per month, whatever was possible from her end. So that amount of money, as time passes by, it becomes a longer. Always there is something called as a eighth wonder, which is called benefit of compounding. When wealth compounds, a 10-year, say if you invest for 10 years, you will generate 20 crore. Let's assume if you invest for 15 years, this 20 can become 100 crore. The 20 can become 100 crore, and 100 crore can become 500 crore. So I'm not talking about 20 crore. Let's assume your generate in 10 years you accumulate 50 lakh rupees. This 50 lakh will suddenly become in 15 years 2 crore. Then it will become suddenly 10 crore. Everyone at some point of time would want to retire, and this is one instrument for planning your retirement. This is one instrument. I today, if I want, I can stop teaching. I can, because I earlier used to work in a rating agency and doing, so I had done 10 years of work in a corporate along with teaching. Then I said I'll not do the corporate experience, because at that stage, moment I said I'm not going to work in a corporate, the salary income from that company was replaced with exactly same amount I could have got from my mutual fund income. From the mutual fund, if I withdraw same amount, my corpus will not go down. That is the planning I had done. So whatever salary income was there, exact same amount could have been replaced with my passive income. There is an active income, there is a passive income. Somewhere passive income has to be generated, because you may work till some, say, there are people like me. When I started itself, in my mind I said that I will leave my corporate at the age of 35. That's the max I had set in my mind. I left it at, I think, 32 or 33, and then I continued teaching is my passion. I'm continuing to doing it. It gives me income obviously, but again, today also, if I want, I can put a stop to teaching and be done with my regular passive income, which can more or less match what I'm getting in my teaching, So this corpus creation, if you want to do, you have to use instruments like mutual fund. Not only mutual fund, you can do direct equity investing also, or fixed deposits also. Multiple instruments are there. What is the use of mutual fund? I'll explain now. So let me take this example. Let's take this example itself. Opening balance, interest, installment, closing balance. Opening balance, interest, installment, and closing balance. Like you took a loan, he had zero. I don't earn anything. Interest is my income. Income is zero. I'm going to earn 1% every month. Installment is my SIP, which I'm going to do every month. I'm planning to do 15,000 rupees. Every month I'm planning to do 15,000 rupees. If I do this in 1 year, I invested 1 lakh 80. It has become 1 lakh 90. No major income. Only some 10,000 income you will feel. Second year, if this continues, by the end of second year, I have invested 3 lakh 60. I've invested 3 lakh 60. I've reached 4 lakh 4,000. I've reached 4 lakh 4,000. So 15,000 I'm contributing. Every month I'm earning now 4,000 rupees. Every month I'm earning some 4,000. This goes on. I'm reaching 10 years. I've reached 10 years. Every month I contribute 15,000. Every month I contribute 15,000. My income itself is 35,000. Income itself is 35,000. This cycle goes on for 10 years, 15 years. At the end of 10 years, I got 34 lakh rupee. At the end of 10 years, I got 34 lakh rupee. This 34 can become 68. Can become 68 maybe in another 2-3 years. In another 2-3 years, it can jump rapidly. It can jump rapidly. So, for example, I reach 49 at the end of 12 and a half years. I reach 51. At the end of 12 and a half years, I reach 51. This is just an example which I'm trying to explain. What I want to explain is 2-3 points. One is just start early. When you start early, what happens? Assuming I invested for 10 years. In 10 years, I generated 34 lakh rupees. In the 11th year, that extra 1 year, I generate 15% of my corpus, 40 lakh rupees. 40 lakh rupees. That extra 1 year gives me 15% of corpus. You remove 1 year, you are short by 15%. You remove 2 year, you could be short by 20-25%. You could be short by 20-25%. So start early. Start early means 20s. I started at the age of I think 25-26. I felt I started late. I felt I started late. So start as early as possible. Mutual fund doesn't mean that you have to spend a huge amount and all. You can invest any amount. You can invest any amount. Second, I said 15,000 example, but practically what will happen? Your salaries go up. So 15,000 can become 20, 20 can become 25, 25 can become 30, 35 can become 40. Everywhere in the practical world, the first crore takes longer time. Takes longer time. It can take 10 years. The second 1 crore when you want to earn, the 10 years will go down to 4 years. Third crore may take only 2 years. The fourth crore may take 1 year, and there could be a stage where 1 crore will come in 1 month also. 1 crore can come in 1 month also. This is possible through an instrument like mutual fund. This is possible through an instrument like mutual fund. Now, somebody may say, I can do fixed deposit also. No. Problem with fixed deposit is it is going to give you a return of 6%. It is going to give you a return of 6%. So I'll make 1%, I make it 0.5. 1% I make it. Mutual fund normally generate 12%. Normally generate 12%. If I make 0.5, if I make 0.5, in 160 months, I was getting 58 lakh rupee. In 160 months, I was getting 58 lakh rupee. Here, getting only 36 lakh rupee. Getting only 36 lakh rupee, which is again a difference of some 40% difference. And this, if I increase the time period, 15 years, 20 years, because if you keep increasing the time period, you will see that mutual fund can help you. Mutual fund. This may look like some magical calculation. All this happens in the practical world. A student of mine, she became a professional. She is working and she continues to contribute an SIP. Her aim is to retire as early as possible. So there could be a stage where you generate a corpus of 2 crore. The corpus itself will give you 2 lakh rupees. 1% per month it will give you. So if my salary income is around that level, I may decide to retire at any point of time. I may decide to retire at any point of time because there is obviously a limited energy available. You may want to, you cannot keep working like 60, 65. The earlier generation, they were ready to work till any number of years. The newer generation, see, earlier what people were doing, they were sticking with the same company for 20 years, 25 years. When I was doing, maybe I could stick to a company for 10 years. At your stage, you may stick to a company only for 4 years, 3 years, 5 years. Even within articleship itself, people think, should I change my audit firm? So it's the change which has happened. It is as time passes by, you will feel that there are people who will say, I'll work only 8 months a year, 4 months I want to take rest, 4 months I want to take a rest, I'll work for 8 months a year, let my passive income take care. In all that, in case in future you have somewhere in your mind saying that you want to retire as early as possible, this is an instrument which you need to keep in mind. This instrument has created huge wealth for people, and that is why people are giving so much money, 85,000 crore rupees, 85,000 crore rupee, a single mutual fund, to a single mutual fund. And India is under penetrated. India penetration in mutual fund is still lower than the other markets, So look at the amount of money generation these mutual funds would have done. Yep. So first I've explained what is mutual fund. Mutual fund is basically an instrument where lot of people will join together. Lot of people will join together. Now I'll tell the parties. People who are joining together. Give me a minute. So mutual fund. First party is unit holder. Whose unit holder is all of you. In AFM batch mutual fund, all of you are unit holders. All of you are unit holders, and you are the owner. You are the owner of the mutual fund. You will get a proportionate share of the assets. You will get a proportionate share of the assets. So the first party is unit holder. They are what? Owner of the mutual fund. They are the owner of the mutual fund. Then second is there's a person called sponsor. Now, for example, I want to start a mutual fund. Dinesh Jain wants to start a mutual fund. If I start a mutual fund, you may believe me, but the entire public is not going to believe me. I don't know who's this person. Why does he want to start a mutual fund? So I need a person at the top, a person called sponsor. He has to fulfill certain wealth, certain net worth levels and all. For example, HDFC mutual fund. The sponsor is HDFC Bank. The sponsor is HDFC Bank. So there is going to somebody who is going to sponsor a mutual fund who will give the initial capital, who will give the initial capital, and he fulfills the whatever requirements are there. Certain requirements are there from AMFI, Association of Mutual Funds of India. AMFI, SEBI has put in certain condition. All this the sponsor is going to meet. All this the sponsor is going to meet. The sponsor will fulfill these conditions. So he is going to contribute capital and initial capital, some part of the capital, and fulfill AMFI conditions. Fulfill the AMFI conditions. This is the second party who is there. There is a sponsor who is going to be there. Third party is asset management company. Asset management company. The asset management company is nothing but that the mutual fund as it is. HDFC mutual fund has HDFC small cap, HDFC mid cap, HDFC large cap, HDFC top 100 fund. Multiple funds are there. Debt funds are there. Equity funds are there. The AMC is going to take care. AMC is going to take care of investing. AMC is going to take care of the investing. AMC will have a research team, operations, and technically a fund manager. Technically, there is going to be a fund manager. A fund manager is a person who is going to take care of the investments on your behalf. Now, when I give 85,000 crore rupees to a mutual fund, there's a possibility of mismanagement. There's always a possibility of, when I say mismanagement, doesn't mean they can take away the money. They put in some bad companies. They're not following what is the investment objective. So all that challenges can come. That is where there's another party called trustee. Give me a minute. There's a party called trustee. This guy, the trustee is going to take care. The trustee is going to take care of seeing that mutual fund is the AMC. AMC is following all the rules and regulation and going as per investment objective. Going as per the investment objective. Otherwise, if 85,000 crores suddenly I put in a company of Anil Ambani. Anil Ambani is currently going through a lot of liquidity problem, and I put entire money in that. Nobody is there to control me. Then your entire 85,000 crore. Because what happened? I am the fund manager. I spoke to Anil Ambani. I told him, you give me some 5, 10, 100 crores, 200 crores. I'll put entire money in your company. I'll put entire money. And who will be at stake? All unit holders. Their money will get lost. So there is a trustee. The trustee is going to ensure that the mutual fund is operating in line with whatever rules and regulations have been set. Whatever rules and regulations have been set in, I have to follow all those rules and regulation. Ensure proper ownership is there of all the securities, and any unit holder has any issue, the trustee is going to oversee the operation and the AMC has to tackle this. These are the four important parties. Apart from this, there are a lot other people, like there could be a people like mutual fund distributor. A mutual fund distributor is, you want to invest in a mutual fund, you cannot go directly to the mutual fund, ask that which mutual fund is good. So you need somebody to help you out. They are called mutual fund distributor. They may help you out. There are banks which are MFDs. There are individual people who are mutual fund distributor. They will help you out in deciding They'll help you out in deciding which is the best mutual fund for you to invest. So MFDs are there in the practical world. Trustee is there, AMC is there, fund manager is there. Fund manager is basically a person who's going to, a fund manager is basically the person who is going to invest, and he is going, the single person who is going to take the decision. He's the single person who is going to take the decision. Clear? Any doubts on this? HDFC Mutual Fund, sponsor, AMC, unit holder, trustee. HDFC Trustee Company Limited is the trust fund. HDFC Trustee Company Limited is the trust. HDFC Bank Limited. HDFC Bank Limited is the sponsor. HDFC Bank Limited is the sponsor. HDFC Trustee Company Limited is the trustee. HDFC AMC. HDFC AMC is the AMC. The AMC is normally use the word asset management company. There is a fund manager. Different funds will have different fund manager. Different funds are going to have different fund manager, and unit holders are people like us who are investing in the mutual fund. Clear? Any doubts on this? This is broad structure. A mutual fund can be a debt mutual fund, can be an equity mutual fund, can be a hybrid mutual fund. So whatever, can be a multi-cap fund. Multi-cap fund, you could have seen an ad which people will say that I want to invest in debt. Debt is good, gold is good, equity is good. A combination of that, a combination of that. So different types of mutual funds are there. There are gold mutual funds. People who want to invest in gold, no need to buy physical gold. I have a gold mutual fund. People want to invest in silver. I have a silver mutual fund. People want to invest in corporate companies. I have small cap mutual fund. I have mid cap mutual fund. I have debt related mutual fund. I also have gilt. Gilt is government funds. Government funds. So you want to invest in government security, directly by government security, or invest through mutual fund. Invest through mutual fund. So whatever asset class you want, for that asset class, you want to invest only in IT companies. There are IT company mutual fund. You want to invest only in real estate companies. There are real estate mutual fund. Whatever is your objective, accordingly there is a mutual fund available in the practical world. You decide that fund and then go ahead and invest in, and then go ahead and invest in it. After your investment is done, MF is not going to follow anything which you say. MF is not going to follow. You can have any queries you can ask, but you cannot ask them why are you investing in this company, why are you not. You don't like it, you take out your money. You take out your money. Any point entry is allowed, any point exit is allowed. There are two categories I'll explain, open-ended, closed-ended, as we proceed. But mostly anytime entry and anytime exit is allowed in a mutual fund. You like the mutual fund, make investments. You don't like the mutual fund, don't make the investment. So that's the first point I wanted to discuss, that what are the various parties there in a mutual fund. The second area is, this is where I'm going to do a practical question, MF return versus individual return. Whatever I'm typing here, want to note it down, else I'll share this in the group. It's your wish, however you are comfortable. You want to note it down, but only thing is, because you're noting down, don't miss out on what I'm explaining. That's the only request, okay? Because just because you're noting down, I will not slow down the explanation. So because focus will be just noting it down, what I'm trying to tell is not getting into your mind. Your focus is just writing. You can manage both, your wish. You cannot manage both, then I'll give this in the group. You can just see every class or every 2-3 class, I'll keep sharing this in the group. Okay, now coming to MF return versus the individual return. Now I explained so much about the mutual fund, saying that this is good, that is good, everything is excellent. A person is not ready to listen to me. He is saying, you are saying mutual fund is good and all. No, I'm not going to do this. I am going to invest on my own. I want to invest on my own. If I invest on my own, I can generate 14%. I can generate 14%. Now, an exam question will ask that if you invest on your own, 14% is the return generated by you. Now, if mutual fund has to give you 14%, if mutual fund has to give you 14%, it has to earn 15, 16, 17, something more. It has to earn something more. Mutual fund cannot earn 14%. Mutual fund cannot earn 14% and give you 14%, because as I said, it is going to employ hundreds of chartered accountants. It is going to have corporate office. It is going to have audits being done. It is going to have your presentations being done. There's a fund manager. So everything has to be paid. Everything has to be paid. So whatever that 80,000 crores is there, no, in that 80,000 crore, there is an expense ratio which is given by Association of Mutual Funds of India. There are certain limitations there on that. So every mutual fund will disclose what is their expense ratio. What is their expense ratio? Higher the expense ratio, lower is my return. Higher the expense ratio, lower is my return. So the MF will say our annual expense, practical world only annual expense is there. ICI talks about two expense ratio. I'll talk about the two expense ratio as I proceed. So question says annual annual expense ratio 2%. Annual expense ratio 2%. Put it simply, MF should earn 16%. MF should earn 16% so that I get my 14%. So that I get my 14%. That's a very simple formula. That's a very simple formula. Apart from this, our exam question has another expense ratio. There are two types of expense ratio. First is annual expense ratio. What is annual expense ratios? Mutual fund has to manage its operation. In order to manage its operation, there are huge expenses which the mutual fund has to incur. Expenses on rent, electricity, salaries, compliance related cost, company secretary, your chartered accountant, so many costs they have to incur. All these costs, who is going to pay? We only have to pay. Fund manager has to pay this. That sponsor is there, AMC is there. AMC also take away part of it. They say we are going to charge 0.1%, 0.2%. AMC makes money out of it. The research team makes money out of it. The research team, everyone is going to make money out of it. Why are they making money? Because I am not able to do research on my own. I am not able to do research on my own. So when I am not able to do research on my own, I need somebody. So these people are going to take out money. So then the mutual fund says we are earning 14%. Unfortunately, I don't get 14. So an exam question will say you on your own can earn 14%. How much should the mutual fund earn if you want 14%? If there is a annual expense and there's one more expense called initial expense ratio, just let's assume 5%. Again, I'm repeating practical world. I don't see much of this. Initial expense ratio is one time expense when you start. Now I give 100 rupees to the mutual fund. Mutual fund is saying you gave me 100 but I got only 95. You gave 100 rupees, but I got only 95. So I can earn only on 95. So first thing mutual fund has to earn is 14 on 95. 14 on 95, which as a percentage will be more than 14%. I'll explain that. I'll give a formula in a minute, but I'll explain first. See, you are giving me 100 rupees. So your expectation was earn 14% on 100. You want 14 rupees. Mutual fund is saying there is a one-time expense. You gave me 100, I got only 95. Can you tell me 14 divided by 95 into 100 is how much? 14 divided by 95 into 100. So I have to earn 14.74. If I earn 14.74, then only what will happen? I'll be able to give you 14 rupees. Then I tell you another headache. Second headache I have is 2%. There is a second headache which is there is 2%. So indirectly I have to earn 14 on 95 into 100 to express in percentage, and on top of that another 2%. If I earn this, I will give you 14%. I'll give you 14%. If I'm not able to earn this, then I cannot give you 14%. Clear? Any doubts on this? So concept book, page 99. Two books we'll be using extensively in the class. One is concept book and second is question bank. Theory I don't want you to bring unless I tell you. So first concept, as I said, concept book is going to cover all the concepts which you have. First concept is MF return versus individual return. individual return, page 99 of the concept book. There is a concept book given to you, page 99 of that. Now this is the formula which I've explained the logic. I've explained the logic. What is the formula here? MF return is equal to own return. Own return is 0.14. I write in decimal. Percentage is okay, but sometimes you'll make mistake in percentages. I'll write in decimal, ultimately convert into percentage. 0.14 divided by 1 minus 0.05. 1 minus 0.05. 1 minus 0.05 plus 0.02 plus 0.02, that is own return divided by 1 minus initial expense ratio. 1 minus initial expense ratio plus what? Annual expense ratio. MF has to earn more than 14. Has to earn more than 14. Practical world, it is 14 plus 2. I don't have a concept of initial expense ratio. It is one time, it is over. That's all. But your theory questions have, your exam questions have it. Let's take an example. You will give an answer. This moment I do this example, no, this concept is over. That is what concept book is going to do. The concept book will test this example. This concept is over. I'll do a practical problem. But this is what this concept moment I do. I'm kind of done. Mr. X can earn a return of 12% on own. Can earn a return of 12% on own. Initial expense ratio is 5%. Annual expense ratio is 2%. How much should the MF earn? How much should the MF earn to give the investor return of how much? 12%. Nothing for you to note down. When I do a problem, you'll note down. So, how much is the own return in this example? Participate. How much is the own return? 0.1 to 12% divided by 1 minus 0.05 plus 0.2. 0.12 divided by 0.95. 4 decimal. Give me the answer. Give me a 4 decimal answer. 0.12 by 0.95. Without percent, just give me in decimal itself. 0.1263 plus 0.02, 0.1463, 14.63%. 14 point. I'll convert into percentage in the end. Can I do percentage in the beginning? I have no problem as long as you have control on numbers. Because numerator will be 12. Denominator will be 1 minus 0.05. 1 you have to write 12. Denominator you have to write 0.05. Or denominator if you write 5%, then you have to do into 100. So if you have control on numbers, I have no problem. In case control on numbers is not there, wherever percentages are there, we will work with decimal. Even if you do number, again I'm repeating. Now if you do it in percentage, you'll get the same answer. 12 divided by 1 minus 0.05 plus 2. Any doubts on this? So first rule we are learning this. An MF, if it earns 12%, we are not going to get 12%. It has to earn more than 12%. Two reasons. One is annual expense ratio and second reason is initial expense ratio. Now let's do a problem now. You open the question bank. Any doubts? Open the question bank. Page 203. Page 203. Chapter 8, Mutual Funds, question 1. Calculation of return has come in exams few times. I have not noted the recent attempts, but it has been coming in exams. Mr. A can earn a return of 16% by investing in equity shares on his own. Now he is considering a recently announced equity based mutual fund scheme in which initial expenses are 5.5%, annual recurring expenses 1.5%. What should the fund earn to provide Mr. A return of 16%? Ascertain the expense ratio, same formula, expense ratio is balancing figure in case the MF can earn 18%, and ascertain the initial expense ratio, in case the MF can earn 19%. I'll explain. Mr. X, he can earn on his own how much? 16%. So logical, it has to earn more than 16. It has to earn more than 16. He is considering a recently announced equity based mutual fund in which the initial expenses 5.5, 0.055, 0.055 when I do my formula, and recurring expenses 1.5%, recurring expenses 1.5%, 0.015, 0.015. How much should the fund earn to provide Mr. A? To provide Mr. A return of 16%, return of 16%. We have the formula. Before I write the formula, again I explain the logic. Logic is very simple. I have to earn 16 on 100, but unfortunately I get 16 on 94.5, on 94.5. What is 94.5? 100 minus 5.5%, 100 minus 5.5%. I'm not getting the money, I'm getting only 94.5, I'm getting only 94.5. So I have to earn what? 16 on 94.5, 16 on 94.5, along with the recurring expense of 1.5%, along with recurring expense of 1.5%. Now write question number 1. Question 1. MF return is equal to MF return is equal to return is equal to own return divided by 1 minus IER, initial expense ratio, 1 minus IER, initial expense ratio, 1 minus initial expense ratio, plus annual expense ratio. Annual expenses, recurring expense, annual expenses, recurring expenses, 1 minus initial expense ratio plus annual expense ratio, annual expenses, recurring expenses. What is the own return given in the question? 0. Listen, 16 is okay. Some rare question, you can say Mr. Fund can earn a return of 18%. I am earning only 16, but I want 18. Then own return will be 18. Then the own return will be 18, because question says I want to earn 18. MF is giving, sorry, individually you are earning only 16. The question suddenly says what MF should earn to give an investor how much? 18, 19, 20, 21. It can be any number. It can be any number. 0.16 divided by 1 minus 0.055, 0.055, 5.5%, 0.055. Annual expense ratio is how much? How much? 1.5, no? 1.5, 0.015, 0.015, 0.015. 0.16 divided by 0.945, 0.16 divided by 0.945, 4 decimal we will write. When I do into 100, it will become 2 decimal. Ultimately into 100 will become 2 decimal. Now we will write 4 decimal. 0.1693, 0.1693 plus 0.015, 0.1693 plus 0.015, 1843 or technically 18.43%. This was part 1. FMF return to give 16% return. MF has to earn 18.43. MF has to earn 18.43. If MF is earning 18.43, I'll be able to give 16% return. I'll be able to give 16% return to the investor. I'll be able to give 16% return to the investor. Balance 2% will go away in annual expense, and 0.43 is technically like a proportionate IER. This IER is an initial expense which is recovered over a longer period. Any doubts on this? Clear? Can you proceed? Next requirement is expense ratio. Expense ratio, if MF can earn only 18%. You told you want them to earn 18.43. So if I cannot earn 18.43, if I reduce expense, I can still give 16%. I can still give 16% if I can bring down, the expenses. If expenses are brought down, I can still give the return which is needed by the investor. Original part we said MF has to earn 18.43. 18.43. MF is saying no, we cannot earn 18.43. We can earn only 18%. We can earn only 18%. Next, target expense ratio. If MF can earn 18%, target expense ratio, if MF can earn 18%, same formula. MF return is equal to own return 1 minus IER plus AER, 1 minus initial expense ratio plus annual expense ratio. IER plus AER. One minus IER plus AER, initial expense ratio, annual expense ratio. How much the MF can earn now? Participate. How much? 18%. 0.18 is equal to 0.18 is equal to 0.16 divided by 1 minus 0.055. AER is balancing figure. AER is balancing figure. Annual expense ratio is balancing figure. Annual expense ratio is balancing figure. Point 0.18 is equal to 0.1693 AER plus AER. What is the annual expense ratio? 1.07 percentage. Clear? 1.07 percentage should be my expense ratio in case MF cannot cut down or cannot give me the required return. If you cannot earn 18.43, cut down expense by 0.43 so that you earn 18 and give the investor. Give the investor required 16%. Give the investor required 16%. Any doubts on this? Clear? Can you proceed? Target EER. If MF can earn 19%. Target initial expense ratio. Target initial expense ratio. Initial expense ratio. If MF can earn 19%. If MF can earn 19%. If MF can earn 19%. MF return is equal to own return divided by 1 minus IER plus AER. EER will be balancing figure. You keep doing it. Refer the screen once you are done. Refer the screen once you are done. Refer the screen once you are done. Do the calculation and then refer the screen. Eight 8.57%. I'll repeat, 0.19 is equal to 0.16 by 1 minus IER. 0.015 goes to the other side. 0.015 goes to the other side. It becomes 0.175. Denominator goes to the other side and becomes multiplication. Denominator goes to the other side. 0.19 minus 0.015 is 0.175. Denominator goes to the other side. 1 minus IER equal to 0.16. I expanded 0.175 minus 0.175 IER is equal to 0.16. 0.175 IER goes to the other side. 0.16 comes to this side. 0.015. 0.015 is equal to 0.175 IER and you get this number. Now, whenever you do any complex calculation, or any reverse working question, once you are done, please reapply it in the formula using 8.57%. Please reapply it in the formula using 8.57% just to check whether we have done it correctly or not. Many a times in these computation you can make mistakes. So in the calculator, 0.16 divided by 0.16 divided by 0.9143 0.9143 plus 0.015 plus 0.015 should give you 0.19, should give you 0.19. Whenever you do any complex computation, or it's not a very complex calculation, but still there are possibilities of mistakes being made. I told you to do the calculation because I know some of you would have made mistakes. Now some of you would have made mistakes. I didn't want to guide the entire solution, but now I'm guiding you. But basic rule is very simple. Wherever you do any complex computation, reverse working is from the last number you go in the reverse order and get the earlier number. Something which has to be subtracted, in a hurry you will add it. Something which is to be added, in a hurry you will subtract it. That keeps happening in a reverse working question. And ICA in the latest attempt, out of the 100 marks paper, 100 marks practical question, 35 questions, 35 to 40 were reverse working. 35 to 40 turned out to be reverse working question, and students found it little difficult. They found the paper difficult because they were not able to tackle the reverse working question. So whenever you do any kind of complex computation, once you are done, use it in the initial formula. 0.16 divided by 1 minus 0.0857 plus 0.015. If you get 0.19, great. If you don't get, you have made a mistake. Any doubts on this? Clear? Can we proceed? Done. Any doubts? Anybody has a doubt? Anyone needs an explanation again? Let me know. Any item, be it simple, difficult, doesn't matter. You need an explanation again, I'm ready to explain. If you have not got the numbers, you can raise your hand, I'll explain. I have no problem. Anybody needs any extra explanation? Done. Okay. I'm going to go to the same concept, MF return versus own return with a slight twist. With a slight twist. What I'm going to do is question 2, you're going to read on your own. And so, okay, I'll read it out and then I'll tell. Mr. Alex, a practicing chartered accountant, can earn a return of 15% by investing in equity shares on his own. He is considering a recently announced equity based mutual fund in which initial expenses are 6%, recurring expenses are 2%. So I can earn on my own 15%, initial expenses are 6%, annual expense ratio is 2%. How much should the fund earn? How much should the fund earn to give Mr. Alex a return of 15% per annum? 3 minutes for you. You will do part A. I'll take you through part B. I'll take you through part B. You complete part A of the question. Once you are done, I'll do the discussion. Once you are done, 3 to 4 minutes for you. This is the practice you'll be doing it in the class. This is the practice you'll be doing it in the class. Some parts I leave it to you. 3 4 minutes. 3 4 minutes. 3 4 minutes of time. Okay. So now let's discuss this. It's very simple. Own return is 0.15 divided by 1 minus 0.06 plus 0.02. Own return divided by 1 minus initial expense ratio plus annual expense ratio. What is the answer? 0.15 divided by 1.0. What is the number? This 159 plus 0.02, technically 17.96%. Technically 17.96%, which is part 1 of the question. Part 1 is 17.96%. In the printed solution, I've used percentages. Sometimes you use decimals, sometimes. But if you have control on numbers, you can do whatever way you want to. I will prefer decimals in the class discussion. Now coming to part 2. Now this is where I was earlier explaining that investing on equity shares on my own is great, but there is also a price attached to it. What is the price attached to it? Is if, let's assume, you are investing on equity shares on your own and you are a chartered accountant, you are earning in a year, in this example, I think some 50 lakh rupees. But what you are doing is you're spending only 80% of the time for your office. 20% of the time you're wasting on, or you're spending on equity investment. 20% of the time. This 20% of the time, if I stop doing equity investment and spend on my profession, possibly my income can go up. Possibly my income can go up. If that is going up, you cannot just do formula analysis and say equity is better, direct investing is better, or mutual. See, direct investing can give you 3-4% more than mutual funds. It can give you in the practical world. But that 3-4% is at what expense you have to check. If you have ample time available with you, no problem. But if time is not available and you are cutting short on your profession, cutting short on your study preparation, cutting short on your articleship commitment, then it doesn't work. Let's read this now. Mr. Alex current annual professional income is 40 lakh. 40 lakh income. His portfolio value is 50 lakh. His portfolio value is 50 lakh. He is spending 10% of his time to manage his portfolio. So if I have 100 hours, 10 hours for managing portfolio, 90 hours for my profession. 90 hours of profession was giving me 40 lakh rupees. 90 hours of profession was giving me 40 lakh rupees. If he spends this time on profession, his professional income will go up in the same proportion. That 40 lakh can go up to 45, 50, 55, 60, something can happen. He is thinking to invest his entire portfolio into a multi-cap fund. Funds NAV will grow at 13%. Means NAV is after IER, after AER, after everything, after IER and AER. Basically, MF could be earning 15-16%, but it will give you how much? 13%. It will give you 13%. Now you are adamant. You are saying on my own I can earn 15%. On my own I can earn 15%, and this MF is going to give me only what? 13%. But there is one extra angle. The extra angle is you're wasting 10% of your time. You're wasting 10% of your time. If you don't waste that 10% time, if you don't waste that 10% time, there could be a financial benefit, there could be a financial loss. I'm not sure. I have to do the analysis. You are requested to advise whether Mr. X can he invest in multi-cap fund. If so, what is the net financial benefit? If you invest in multi-cap fund, two benefits: 40 lakh into 13%. That's my income. And increase in professional income. Increase in professional income. What is the loss? 40 lakh into 15%. 40 lakh into 15%. Income is 40 lakh into 13%. Loss is 40 lakh into 15%, because I was doing investment on my own. I was doing investment on my own. Or to put it other words, benefit is increase in professional income, loss is 2% of portfolio. Loss is 2% of portfolio, because on your own you are earning how much? 15%. Mutual fund is going to give me only 13% after all its expenses. After all its expenses, it is going to give me 13%. Is there a benefit or not? I have no idea. Logic is very simple. This was 50 lakh. If this was 5 crore, no, maybe spending time on investment could be better. As the portfolio values goes up, doing research, spending time on it, earning that extra 1-2% is better. But when portfolio value is less, lot of us, see, at your stage, if you're going to invest only 10,000 rupees, 1 lakh rupee, what is the point of doing research and all? Where are you going to, what that extra 1% is going to do on a base of 10,000 rupees? If you have 10,000 rupees investment, extra 1 or 2% is going to 200, 300 rupees. Doesn't, learning purpose, you are doing research, that is okay. But the point is, you are going to try to beat market, beat mutual fund, doesn't really help. Now let's do this. Financial analysis. Financial analysis with opportunity cost. Financial analysis with opportunity cost. With opportunity cost. What is opportunity? See, in case there is an opportunity cost, my formula and all will not work. You cannot say the return, the MF should earn using formula and all, you will not get the answer. Using formula saying that own return plus all this is not going to work. I have to do a cost benefit analysis. Particulars calculation amount. Particulars calculation amount. Particulars calculation amount. Benefit of MF investment. That is, if I invest in mutual fund route, what are the benefits? Benefits of MF investment. Benefits of MF investment. Benefits which I get by investing in mutual fund. Income from MF. Income from MF. Income from MF. I have a portfolio of 40 lakh rupees. I have a portfolio of 40 lakh rupees. Sorry, 50 lakh rupees. I have a portfolio of 50 lakh rupee, and MF is saying I will give you 13%. I'll give you 13%. Later on, I'm going to write saying that there's a disadvantage, that is demerit in that loss of 15% income. Loss of 15% income. Income of MF 50 lakh into 13%. 6,50,000. Yep. This is a benefit I'm going to get from investing in MF. Technically not a benefit. This is like a disadvantage only. Why disadvantage? Leave some 3 lines. Something else will come. Costs of MF investment. Leave some 3 lines gap. Cost of MF investment. Loss in direct investing income. Loss in direct investing income. What I was doing is I was doing direct investment. I was doing direct investment. If I was doing direct investment, I was very happy about it. Reason is 50 lakh into 15%. 50 lakh into 15%. Net net investing through MF route is not good as such. As such, it is not good because MF is giving me only 13 and direct investing was giving me 15. But then there is a next problem. The problem is there is a price attached to the time you are spending. Next, increase in professional income. Increase in professional income. Increase in professional income. Now, very simple. Earlier, I was spending 90% of my time on profession. 90 is equal to 50 lakh. 90 is equal to, sorry, 40 lakh. 90 is equal to 40 lakh. Extra 10 will give me something more. Extra 10 will give me something more. 90 percentage of the time I'm going to get 40 lakh. 90 percentage of the time I'm going to get 40 lakh. Extra 10 percentage of the time. Extra 10 percentage of the time. It can also be interpreted that 100 is giving you 40 lakh, extra 10 is 4 lakh. That is what ICI did. That's just an interpretation. I feel more comfortable with this interpretation. 90% 40 lakh rupees. 90% is 40 lakh rupees. Extra 10. Extra 10 will give me something extra income because I'm going to spend that 10 hours of time on my profession on. Or otherwise, you can say 100% of time on my profession. On the profession, whatever time I spent, that was giving me 40 lakh rupee. I am having now extra 10% time. I am now having extra 10% of the time. That can give me how much? That can give me how much? So, right, 90 is equal to 40 lakh. 10 is equal to question mark. 90 is equal to 40 lakh. 10 is equal to question mark. This is my extra income. This is my extra income. How much we are getting? Total benefit of MF investment. 650 plus 444, it is going to be 10 lakh. Total cost of MF investment. And net financial benefit. There is a net financial benefit. Total benefit is 1094,444. I'll repeat again. 90 is equal to 40 lakh income, extra 10% time. Interpretations. ICI, I think, interpreted it as, that's what I remember. ICI solution takes additional income as 4 lakh. As 4 lakh. That is their interpretation. I feel this interpretation is better. But it doesn't really matter. Because MCQs and all coming in now, so it will not really matter because there this headache will not be there. In the choice, you may find 4 lakh, you may find 4 lakh 44, choose one of them. Any doubts till this? Last item, net benefit of MF investment. Net financial benefit of MF investment. What's the number you get? Sorry, 3 lakh. Clear? Now my final answer is very simple. The company should, or the Mr. Alex should do investing through mutual fund. Mr. Alex should do investing through mutual fund. I'm kind of done with today's session, but I'm going to explain what ICI does. Now the same question. I will say, tell me what should be the minimum percentage income I should generate on direct investing so that I can do direct investing. So that I can do direct investing, which is very simple. Here I have to multiply with something so that I get 10 lakh 94 444. So that I get 10 lakh 94 444. So that I get 10 lakh 94 444. Just one example. Second, what should be my minimum portfolio value? What should be my minimum portfolio value so that I can do direct investing? In that case, 50 lakh is X. 50 lakh is X. So here it is 0.13x, here it is 0.15x and equate both. Equate both. You will get X as maybe something like 1 crore, 2 crore, 3 crore, 5 crore, 10 crore. As value keeps going up, you will find that it is beneficial. It is beneficial to do direct investing. Third requirement, what should be the current professional income so that I'm indifferent? So that I am indifferent. You said 90 is equal to 40 lakh. Question mark is equal to something. The 90 is equal to question mark now, and indirectly you will reverse work. You will do reverse work. So I can do reverse working in multiple ways. I can do reverse working in multiple ways. Same question will come in exam. What ICI will do is, what should be the percentage income in direct investing, which means 15% is X, or what should be the income from MF so that you are indifferent, 13% will be X. What should be the portfolio value today, 50 lakh will be X, or what should be the current professional income, 40 lakh will be X. Anything can become X, anything can become X. Net benefit will be 0, net benefit will be 0. If net benefit is 0, then you are indifferent, then you are indifferent between MF investing and direct investing. This is what is a steady pattern of ICI. They keep testing it in this manner, they keep testing it in this manner, they keep testing questions like this. Now whatever question I did is my concept 2, MF return versus individual return opportunity cost. MF return versus individual return opportunity cost. A person, nothing for you to look at the screen. A person is required to spend time while investing on his own. However, investing through mutual fund will save this time and give, and the same can give extra income to the investor. If a question gives data on this, then we should prepare a cost benefit analysis of own investing versus MF investing. Formula based calculation will not be possible. At home, you do this MCQ. This is just revising what I did in the class, just revising. So today's class, 1.5 hours I've spent on mutual fund. Okay, 1.5 hours I spent. Initial I gave intro. If you want to revise today's class, you will just read these two concepts. That's all. This is what is going to happen in every chapter. You read the concept, solve the question below that. That question is over. Technically, I should not do any problem. I should only do concept book. If I do concept book, my entire AFM will get over in maximum 40-50 hours. But only thing is, you will not get the comfort of solving it fully. That is why I have to solve it fully. But ultimately, concept book is what is going to cover everything. It is going to cover everything, and in this book you can make extra notes if you want. If you find something extra learning, you keep making notes. Your revision is going to happen only through this. Second thing which will happen is, in the concept book, in the question bank, along with the question, I'll be mentioning something like concept revision. I'll be mentioning something called as concept revision. What is the use of this concept revision is, some question I'll not be able to cover fully in the concept book, fully in the concept. The examples will be there. Question 1, you should not see it again. Question 2, which I did today, no need to see it again. 1 and 2, where will you see? In the concept book. In the concept book MCQ example. In the concept book MCQ example. You are not going to solve 1 and 2 again. 1 and 2, how will you solve? Through the concept book. This will only ensure that you're able to revise the AFM in 40-50 hours, and ultimately day before exam. Ultimately the day before exam. I'll end with this. We'll continue in the next session. Thank you, friends.